I'm about to tell you why you keep losing and donating your money to the Forex market. I'm going to confront you with the real truth in this video, so be prepared. I'm not trying to call anybody out or make anybody feel belittled or anything like that, but I'm going to give you the 100% truth behind why so many traders come to this industry and within 90 days, they're gone with less money than they started. This is the reason, and I hope that you stay to the end of this video. Let's look. Stage 1. The first phase of a new trader's career. They see that they want to make money from trading, and their first reaction, their first idea is, let me head over to YouTube, let me find somebody on social media that seems to know what they're doing. It's very, very normal. We all want to see somebody who's doing it well first, and that's usually what gets people introduced. They see somebody on YouTube who made money trading Forex, and they're like, hey, I can do that too. I want to do Forex. What is this? So there's an excitement, and the first thing they do is they find somebody who's talking about a strategy, whether it's online or in a forum, or maybe they just have an idea of their own and they're like, I think I have this great new strategy. And very quickly, the mistake is they jump into stage 2 almost immediately. They take that trading and they go live. I know that this was me when I was a new trader, so I can assume that, and from many people that I've spoken with, this is the normal next step. People go live, they jump into their trading account, they load up a $100 account, $200 account, and in some case, worst case, they put too much money in, etc. But anyways, they go live with this strategy and a huge sense of optimism. New traders start out very optimistic, and you get crazy enough to stay in this stuff like me for 6 years. It's not that you become pessimistic, but you do realize some of the ugly components, which we're going to talk about. Next comes stage 3. So you go live, and in many cases, myself included, stage 3 was awesome. Stage 3 of a strategy is where I would jump in and, of course, actually have a little bit of success, which, by the way, you guys, this is the worst thing that can happen to a new trader, is you come in here and you actually start to make money on a strategy. Of course, there is such thing as luck when it comes to trading, and in the short term, many times traders will emphasize very heavily the success that they have and forget to attribute that there is such thing as some luck that can happen when you first start trading a certain strategy. So when we look at this, we say, hey, this is awesome, and then we have some success, but then inevitably stage 4 comes into play. We actually enter into a losing streak, and just as quickly as we assumed that this strategy was amazing, people jump to the other side of things once it starts to have some ugly components to it, and we enter a loss streak. You draw down, you start taking on water on the ship, right? The trading strategy is not going well, and people take a look at this and they say, hey, this may not work. I don't think that this strategy is as good as I thought, and I totally think that I'm just going to lose my money. And then when it continues to happen for just a little while, it doesn't even take much, just for a couple trades in a row, losses, people will start to question the validity of their strategy, and we're back to stage 1. Before I continue in the video, I want to invite you guys to join our free Telegram channel. If you would like to get trade ideas sent to your phone or to your computer and you have Telegram, just click the link at the top of the description and you'll get access to our Telegram channel where you can get ideas each and every day. See you there. They go back to YouTube, they find a new strategy, somebody else talking about something, they get optimistic again. And what happens? The cycle continues. They head over here and they say, hey, I'm taking this live. I need to make back that money that I lost over here. Forget all that nonsense. I'm never doing that again. This was a terrible idea. But this time it's going to work. And they go over here. And then they go live. They lose money. They go live. Maybe they have a little bit of success. Things look good. Back to this, 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 back to this. Do you get where I'm coming from? This, you guys, is the definition of insanity, is applying the same approach to building trading strategies and success. This is what new traders do. This is what I did. And this is what my experience with many people that I've worked with has looked like. People do this over and over again. This is a terrible, terrible way to approach trading, and it basically guarantees that you're going to lose money because you are basically approaching trading all wrong. And it's not really your fault. The markets are advertised as this place where you can predict things really well and it's going to be easy and you can make money with simple stuff. But the truth is, the market is not easy. There is no strategy that is going to be perfect. And if you take this logic, we go back to this for a second, if you think that there is a perfect strategy, you're going to stay in this loop forever. If you think that there is a system where you are just going to continuously win with very little loss streaks, and loss streaks will be brief and win streaks will be long, and it will be painless process to making money. If that is your approach, you are guaranteed to lose money in this industry, because it's not how it works. No strategy is perfect, and that's why we need to talk about the flawed logic of this. It will keep you a losing trader forever. So this is an important scene to this video, but do you guys remember in that Holy Grail scene from Indiana Jones? Remember how that girl cannot help herself but grab onto the Holy Grail, and it causes her to fall to her death? Very tragic, very, very grim. But truthfully, this is what traders find themselves doing over and over again. They are attracted by stage one. They are again and again fall for the same trick, even though they fully know that it's going to lead them to this terrible ending. And yet people will do this and chase their way to a Holy Grail into an abyss, because that is what they want trading to be. Trust me, I'd like trading to be that easy too, where you get a Holy Grail system and then you just can turn $100 into $10,000 over and over and over. But that is a YouTube lie. That is a social media facade that many traders can't see past, and it is dangerous. And that's why on this channel, we try to push through that and show you guys the other side. Anyways, let me show you what changed everything. If you made it to this video, comment down below. Let me know that you're still here, and I hope that you can chime in and add something in the comment section for other traders who are aspiring. If you have any tips, please feel free to leave them in the comment section. In all of my studies and hours of backtesting, I've been doing this a very long time. In all my studies and all my backtesting, and in all my experience with professional traders, looking over performance of other traders, looking over my own performance in my trading, there are no holy grails in trading. There are no systems where it's a painless way to make a ton of money. Trading is pain. It is hard work. Chasing a magical system will absolutely leave you with less money. And in a second, I'm going to show you what I mean by magical systems, because they might be more within what you think is realistic than you expected. Of course, there is some people who do outrageous things in trading, but oftentimes it's because they are cheating. There are insider traders in this business. There are people at the top who are able to do things that maybe the people at the bottom are not able to do. And that's not us, and it's not something I concern myself with, because truthfully, I am a retail trader. I have no problem with that. There's nothing wrong with being an insider or a retail trader, but we have different expectations than insider position, institutional traders, etc., right? So anyways, let me show you some bad strategies, okay? Here's some flawed logic. These are some common expectations or ideas that new traders have that are really, really dangerous, that they oftentimes get from social media or from hype stories that they see in the news. Expecting an 80% win rate with a 1-to-1 risk reward. This is really, really quite crazy, and I've never seen anybody do it with consistency for a long period of time that can actually show a track record doing so. 80% of the time calling the market in a short-term basis is incredibly, incredibly rare. The market has a lot of noise, and to assume that you know where the market price action is going all the time is really dangerous. And again, I'm telling you from my experience, I've never seen a trader be able to show that they can call the market direction on a 1-to-1 risk reward basis 80% of the time. I've never ever seen it. I'd love for somebody to show me on a couple years of data that they've done that with thousands of trades or whatever, but anyways, another one is expecting to hit huge risk reward trades consistently, like very often, like 10-to-1 risk reward. And by the way, guys, I'm not trying to sound negative. I understand that this is sounding like really, aggressive, but I'm just trying to show you guys that these are thought processes that I had at a new trader that were false. That were holding me back until I dropped some of these thought processes. I was never able to become consistent. Next is expecting upwards of 10% per month without high risk of blowing an account. You can do more than 10% per month, but you need to accept that if you do that, if you're expecting big returns like that per month, you are putting the account at jeopardy, because you have to take risk in order to make 10% per month on average, because there might be months where you make 10%, There might be months where you make 15%. There might be months where you lose 10%, lose 15%. So if you can average out 10%, you're going to need to take a lot of risk on your account. Again, I've never really seen anybody with a track record be able to do 10% per month consistently without high risk. I've seen people do it, but they do have to accept a high margin of risk and high margin of blowing the account to do so. And so that's why I don't think that long-term it's very reasonable. Next up is thinking you will be able to gamble a small account into a big account in a short period of time. For example, when you see $100 to $1,000 challenges on YouTube, they are... So here's the problem, right? You might say, well, hey, so-and-so has done this where they turned $100 into $1,000 and they showed it on YouTube. But what about the times where they went 100? Okay, so they went 100 to 1,000. They showed you this one. But what about the like 500 times that they just tried to do that challenge? They recorded it, but then they never uploaded it because they blew the account every time, right? You got to be careful on YouTube because people can show what they want to show you on YouTube. So don't ever take, just because you saw someone on YouTube, it doesn't mean much because they could be doing something different when the camera is off. Anyways, I don't think that these are approaches to trading that are realistic. The markets are not that predictable. To try and make $100 into $1,000, you have to be pinpoint perfect with every trade and also get quite lucky. That would be my opinion. Again, maybe it's not the most popular opinion, but I'm not here to be popular. I'm here to tell you my experience as a trader. I still do this on YouTube because I am doing it to be transparent and honest about my trading experience through the years. Now, I might be, again, you don't have to agree with everything I'm saying, but this is my solution. This is how I actually think that if you want to be profitable in this stuff, how to approach it. The solution is to do the boring, mundane work. Backtest, backtest, and backtest. Again, constantly testing. And you guys, nobody actually spends time backtesting. And this is amazing to me. Very few traders actually get on their charts and backtest for hours and hours and hours. I did that for so many hours in college, and I still do it to this day. I'll jump on backtesting sessions and review performance and look at things. It's a must. There's no avoiding this. If you aren't spending dozens, if not hundreds of hours on your charts, testing your concepts through historical data and looking at the pros and cons of your strategy, you won't make it. I really, truly believe that. You need to test your concepts thoroughly. And that means putting in like a full-time job to test concepts. Before I even consider taking a strategy to a demo account or a live account, for me, I need to see 1,000 backtest examples minimum before going live. So let's say, for example, I'm buying a market when it dips by a certain amount on an RSI. That's my strategy idea. Okay, well, I need to test that theory 1,000 times, 1,000 different examples. How often do I win? How often do I lose? Right? I need to have that data in order to make a thorough decision on whether or not I need to trade this concept. I have videos on backtesting. Maybe we can share a pop-up on the top right of the screen if you'd like some help with backtesting. I've done a lot of it and I've shared a lot of tips on it on YouTube. So you can check those videos out if you would like. So the next step is actually going for a realistic trading strategy. Remember, in the beginning of this video, I showed you guys the cycle of doom, which is just continuously coming up with a brand new optimistic strategy and then giving up on it as soon as it has a tough time. Every trading strategy is going to have a tough time. So when I mean realistic trading strategy, what I'm talking about is going for smaller gains, accepting losses, pushing through losing streaks, and also having the confidence to sit through losing streaks during the bad times because you've backtested. Again, confidence is coming from the backtesting phase. If you're backtesting, that's going to keep you more confident and willing to persevere during a downward turn in your equity. 1 to 5% per month gains is my opinion for newer traders. Maybe 1% or less. If you can even just produce $1 consistently over time, that to me would be, you're doing better than most traders, because most traders just lose their money. Before you bash 1 to 5% gains per month, which people always do on my YouTube channel, before you bash that concept, see if you can actually do it long term and prove to yourself how easy it is. Because so many people will say, oh, that's silly, anybody can do that, but then they can't actually do it, right? So it is not as easy as it sounds. It sounds easy, but remember, sometimes you're going to have negative 6% months. And sometimes you're going to have plus 8% months. Sometimes you're going to have plus 2% months, plus 1%, minus 7%, right? This actually comes out probably somewhere in between all these numbers, comes out to somewhere in this range. So it sounds easier than it is. Trust me, I've been doing this a long time. Very few people are actually able to do this on a consistent basis for a long period of time. So keep it simple trend following concepts, pullback strategies, etc. Go get out there and test these concepts, but don't rush making money. Find a good system for you and the money will follow. Again, people focus on the money part of this stuff early on, and that's why it prompts them to get onto a live account very quickly. But the key here is going to be finding a good system for you and worrying about the money later, right? Find the system first, study the markets, be interested in the stuff first, and then come back. Let's have a look at what a realistic trading cycle should look like. Again, we talked about that cycle earlier. That was the wrong cycle. Here is the right cycle, in my opinion, to finding a profitable trading approach. Stage 1, you have a new trading hypothesis, not a overhyped, optimistic, oh, this is going to be the game changer, but a theory, a hypothesis, taking the scientific method kind of approach. Step 2, you're going to backtest extensively with dozens of hours minimum on your backtesting software or charts, writing down theoretical trades and how things would have performed. Literally dozens of hours are a minimum on this. Demo trade, small account forward testing. So once you actually have a strategy that looks pretty good after the backtesting phase, this is where we're going to go into a small account. We're not going to put big money. This is up to you, by the way. You can either demo trade, or if you prefer to just put small money, that's a choice that you can make for yourself. If you want to put, $500 in a trading account or $100 in a trading account, whatever is small to you, just depends on who you are, where you are in the world. It's up to you. Or you can demo trade, either way. Just going forward with this concept, but not getting super overly optimistic. We're just going to take this live and see if we can produce similar results to what we did in our backtest, if the backtest looked good. Evaluate the pros and cons of your strategy after a few weeks minimum of doing this stage. So again, this stage might be a few weeks, this stage might be a few weeks, and now we're taking a look at evaluation. Very simply, if the strategy does not perform as we expected during the previous phases, we're back to square one. Again, this time we haven't overhyped this whole theory. We haven't been, we're not going to be massively let down if we have to restart, but we've learned something by doing this. So every time we have a strategy that goes from backtesting to demo trading, evaluation, and it doesn't pass, we learn something, which is a beautiful thing. Looking back on my own career as a trader, I learned a lot from all my backtesting that I was like, this just is not it. This is not quite the strategy I'm looking for. It didn't produce the results that I was looking for, etc. So if it doesn't perform as expected, we reevaluate or we check a new hypothesis. We make changes or we start totally fresh. But again, this is where we have to take a hard look at things like drawdowns, returns, etc. Make up our mind about whether or not this is worth continuing. If not, then we're back to our hypothesis stage and we repeat this process. Now, here's the key difference between what we talked about here and what we talked about earlier. This cycle can also be pretty frustrating and mundane, but there is, fortunately, a way out of the cycle. Here is our way out of the cycle. After doing this many, many times, I eventually found strategies that looked decent and actually would be worth the flaws that they had. Because every strategy, by the way, every single strategy is going to have ups and downs. Pros and cons exist with every single strategy. So if you understand that and you say, okay, well now, if the strategy looks decent, let's continue to optimize and trade it forward. And the next phases of this could be potentially slowly adding more money to your trading account from external sources like jobs, like other businesses or side hustles that you're doing, and adding more money to it so that it becomes more worthwhile, right? Because trading capital is a must. People constantly try to turn small amounts of money and magically turn it into more in the markets, but the markets are not really meant for that. The markets really truly are meant for building money into more money. So the more money you bring to the table, the more worthwhile trading becomes if you have a strategy like this. So again, what is that going to look like? It's going to be realistic, accepting the flaws, and again, kind of what we talked about earlier with this sort of thing, right? Realistic gains. If you're starting to see these sorts of results, 1 to 5% consistently per month on low drawdown, etc., that is going to be the key to getting out of this loop, right? That's how you get out. That's how I personally found my way out of trading into this cycle and into real trading, is I eventually found a strategy that looked good, that was not perfect, but I accepted the flaws and I'm willing to work with it. I'll give you just a little bit of context. My strategy, I am a true trend follower. That's my TTF method or whatever. It's just my fancy name for my trend following approach. TTF, we've talked about this in some videos. In fact, what I'll do is I'll link it at the top right hand of the screen if you would like to watch that. I did a video where I talked about my strategy in depth, and here's the thing that you need to know. My pros are that the pros, in the simplest form, is that I have really big winners. So I have big wins, and the cons are that I have a low win percentage. There you go. Big wins, low win percentage. I accepted that. Overall, I make money. That is the end of it. And I can continue to slowly optimize and consider other things, and perhaps even enter this stage again if there are other concepts or strategies that I want to potentially add to my portfolio of trading strategies. But this is my main method. Big wins, low win percentage. It has a pro, it has a con. There are no trading strategies that only have pros. That is something we have to accept. So there you go, you guys. That is how, in my opinion, you escape the cycle of doom and how you become a profitable Forex trader. In my own experience and in my own journey, this is what it was for me. Thank you for watching. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.